Hi everyone, Connor from Zenfinex here, back with a monthly analysis for June. This time I'm going to be going over the gold market and I'm going to be giving a rundown of what is coming up on the fundamental side, which is including a huge event tonight, and then tying this in with a balanced technical analysis on the chart. Now at the time of recording this video, gold is hovering at around $1860 per ounce and awaits really key economic data to come out this evening to really act as the catalyst for volatility in this market. So the market has been generally flat for a week or so, really. I think this may be because the US dollar is actually looking like it wants to form a base. Now, if the dollar continues its recovery and we actually see the same dollar rally trade that we saw towards the start of the year, then gold could fall to something like $1,800 per ounce. Now, as always with gold, it's important to talk about inflation and the US dollar. Now, the FOMC data today is what's going to cause the volatility, so I'm going to focus on that. At 7 PM GMT today, traders will find out the US economic projections, followed by a much anticipated press conference at 7:30 PM GMT. Now, during this time, the markets are really going to be volatile as inflation pressure is ramping up on the Fed once more. It is expected that there will be total commitment to their current expansive fiscal policy. However, what's really important is if there are any talks around tapering, then this will be one of the first times that a slight change of policy is hinted at in the future. And as a result, I would expect a volatile reaction from the market, from this market. Now, traders are literally going to be listening to every single word that the Fed say, so we should be as well. But just remember, it is argued that gold is an inflation hedge. So the prospects of inflation may actually help boost the gold market. Let's see what the reaction is after the FOMC later. Okay, so moving on to the chart now, I'm going to go through some really key levels to look out for. I've just zoomed out on the daily chart. And as you can see, if I actually zoom out a bit more, you can see that we have had this change of momentum and change of trend really, from this upside from June 2019. You can see that now we are actually creating a series of lower highs as we go down, and I'm interested to know whether this recent momentum to the downside from around 1920 is the sign or is the creation of a new lower high. Now I'm going to argue both sides for it now, and first of all, for gold buyers out there, you can see that we have actually tried to come and test this 200-day moving average. We've actually wicked back to the upside, and we actually did get this really clean break of the 200-day moving average to the upside. And many people thought, oh, this market's going to 2,000, and it very well might do in the next few months. But for the next month or so, I'm interested to see if we can get a daily close below this low here. If we can, then I'll be looking for more downside, potentially down into an area such as around 1820, which would be our daily order block. And potentially a take profit level for any selling opportunities. And if I just go down onto the 4-hour chart quickly, where we can get this selling opportunity from is this low that I highlighted on the daily chart. You can see that it was actually broken on the 4-hour chart, and we've since started to correct to the upside. If I actually mark a really clean daily order, 4-hour order block level, apologies. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus 0 commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. 4-hour order block. This level actually broke 2 structure lows. This structure, BOS break of structure, and this structure low, BOS break of structure. and I'll move the moving averages so you can see a nice clean chart at the moment. So what I'd like for price to do is test this order block level, and then we can aim for our take profit level down at around 1830. It's not really a coincidence that this order block sits around the 1900 level, that area that's provided resistance multiple times. Can we get all the way up there? Who knows? We'll have to wait and see. We may get some volatility from the press conference today after the FOMC. But aiming for these lows down at around 1830 would be around a 5.94R trade. Now that's the selling bias. So just bear that in mind and maybe take some notes, maybe set an alert up at around 1892. For buyers out there, I want to go back to this daily chart and move back to these indicators that I've got. Now you can see that we actually could use this 200-day moving average as a real support level. It has been in the past. It has tried to come down and test, and it's since bounced back up. Will we get another test? Potentially. It does sit maybe around 1840. So on that selling buy, you could have put your first take that selling trade. You could have put that first take profit at around 1840. Now, what I'm interested in is we haven't actually been able to close the daily below this structure low, and it actually could class this as a liquidity grab. Get rid of that. We could class this as a liquidity grab, which is actually a bullish sign. Now, from there, buying take profits for me, I want to be a bit cautious, because when I look at the long-term trend line to the downside, this is coming into play at the moment. So my first take profit really would be for buyers up at around 1920. If we can get a break above 1920, I do think that this market is eventually heading up towards 2000 again. Can we see if gold can act as that real inflation hedge, and then we can really look to go for this 2000 level. Where you can get this buy from potentially, if I get rid of this circle, so I'm just on the 1 hour chart now, is if I look across, what we want to see now is price run up and break. This is on the hour chart. Break this high on the 1 hour, so we can get confirmation that this market is bullish, because we did have this nice spike to the upside, and then we can go looking for our take profits up at 1900-ish, 1920. So yeah, potentially this could be a level that we buy from, but I would want to see confirmation of a break of structure first before we do that. So that is it for gold, guys. I've given both sides of the story depending on what side of the fence that you actually sit on. I'm on the side of the fence where I think we could see another leg to the downside, but I'll only be a short-term seller, still long-term bullish, and still want to be buying on those dips. So that's it for today for gold, guys. Please like and subscribe to this channel. As always, it really helps support and boost our channel, which is running nicely. We're constantly getting out our 3 videos a week to you guys, and we're getting some great feedback on them as well. If you could drop any comments as well in the comments section, any opinions you have on gold. I know that there's a lot of different opinions that I've seen online, hence the balanced forecast. And I'll catch you all for the next video tomorrow, which will be on silver. Cheers, guys.